Let's start with a simple idea that is about to reshape global payments. SWIFT, the messaging backbone used by more than 11,000 financial institutions, is moving from controlled blockchain tests to real-world implementation. That shift may sound technical, but it is one of the biggest moves in modern finance, and the timing could not be better for companies like Ripple and digital assets like XRP. SWIFT has spent years connecting banks to blockchain-based assets like stablecoins, tokenized currencies, and central bank digital currencies, often called CBDCs. Up until now, most of that work lived in sandboxes with simulated transactions. But in 2025, SWIFT will run live pilots with banks across North America, Europe, and Asia. These banks will use digital wallets for settlement and move tokenized cash using systems that resemble blockchain architecture. In other words, what used to be a test is about to become the new normal. A quick reality check so we stay precise. SWIFT has not named any public crypto asset for these pilots. This is about interoperability, meaning different systems working together in messaging, not endorsing a specific token. Now, why does this still matter for Ripple and XRP? Because Ripple built its entire model around the exact kind of interoperability SWIFT is now testing. Ripple's on-demand liquidity network, or ODL, lets institutions move value quickly by using XRP as a bridge currency, basically a neutral asset that connects two different money systems when they choose to. And the XRP ledger, often shortened to XRPL, was designed from day one to handle tokenized assets, fiat bridges, and institutional settlement with low fees and high speed. For years, people called Ripple's approach too early. Now the rest of the financial world is catching up. To grasp how big this shift could be, it helps to know what SWIFT actually does. When a bank in one country sends money to a bank in another, it does not push cash across a wire. It sends a message, and SWIFT is the network that carries those messages. Those messages tell banks how to update their ledgers and move balances. SWIFT moving into digital assets means those messages may soon trigger tokenized value transfers directly, linking traditional accounts to blockchain networks through standard data formats. Now let's connect that to Ripple's recent strategic positioning. In 2023, Ripple joined the International Swaps and Derivatives Association, known as ISDA. Think of ISDA as the global group that writes the rulebook for financial contracts. It standardizes how institutions handle risk and trade agreements. Membership puts Ripple at the table where standards for collateral, liquidity, and settlement are discussed. No one is claiming Ripple will settle the entire derivatives market. That's the vast system of contracts banks use to hedge things like interest rates, currencies, and credit risk. The point is access and alignment. It signals institutional relevance rather than retail hype. Now, let's talk about XRP's design, because this is where things get interesting. At launch, 100 billion XRP were created. No more can ever be minted. Each XRP can be split into tiny fractions called drops, so the system can handle very small payments, like pennies or less, with precision. That fixed structure matters because it prevents dilution and ties value to utility. As more institutions use XRP to settle real transactions when it makes sense, demand draws from a capped supply. Ripple's documentation describes this as organic demand rather than speculative or artificial demand. Here is a quick example of the difference between engineered hype and organic value. In early 2025, Solana's price jumped by around 60% after a wave of meme tokens launched on its network. Those tokens required people to buy and use SOL to mint or trade them, which created a short burst of buying pressure. It looked like real growth, but much of it was manufactured demand. When the attention cooled, the price cooled with it. XRP by design ties demand to function. The network charges small fees in XRP to prevent spam and denial of service, and those fees are destroyed with each transaction. Every account on the ledger holds a small reserve of XRP to stay active. And when institutions use ODL corridors, XRP can act as a bridge between currencies, moving value in seconds. All of that creates steady, built-in demand based on use, not trend. This is why Ripple often says long-term success depends on adoption, not speculation. Ripple's business model is simple. As the network and its integrations grow, utility grows, and demand for XRP can rise with it. In Ripple's ecosystem, usage is the marketing. Every integration, every corridor opened, and every partner connected adds a measurable reason for XRP to exist. Now layer that organic design over Swift's 2025 pilots. Banks are about to use tokenized wallets and blockchain-based settlement at scale. If Ripple's technology plugs into that environment, even indirectly through partners, it validates the architecture Ripple has been building for years. It also signals something bigger. We are watching the traditional financial system move toward the model that crypto set out to prove, not to replace banks, but to connect them more efficiently. For viewers new to crypto, here's the short version. Swift handles the global messaging layer. Ripple built a liquidity and settlement layer. And ISO 2022, the international data standard rolling out across finance, provides the common language that lets those systems talk to each other. Once everything speaks the same data language, value can move across borders faster and cheaper than before. For longtime crypto watchers, the key insight is convergence. Swift, central banks, market utilities, and fintechs like Ripple are aligning on tokenization, interoperability, and production use. The question is no longer whether blockchains will be involved. The question is which networks and standards will anchor the next phase of finance. Ripple's early start, its institutional partnerships, and its fixed supply asset give it a clear seat in that conversation. Here is a fresh proof point that fits this bigger picture. Securitize, a leading tokenization platform that works with blue-chip managers like BlackRock and VanEck, announced a plan to become a public company at a multi-billion-dollar valuation. It operates a regulated end-to-end stack for issuing, trading, and servicing tokenized securities across multiple blockchains. Ripple and Securitize also announced an integration that enables RLUSD, Ripple's dollar stablecoin, to interact with tokenized fund flows on Securitize's platform in a compliant way. That means tokenized funds on proven rails can connect to a stablecoin issued by Ripple for on-chain liquidity and settlement options where appropriate. Add one more practical angle. Corporate treasury systems are beginning to connect to tokenized instruments and stablecoins through established partners. And this is exactly where Ripple's acquisition of Treasury becomes massive. Treasury is connected to more than 13,000 banks to manage cash, liquidity, and financial risk processing over $12 trillion each year. By bringing that infrastructure under Ripple's umbrella, the company now sits at the intersection of where enterprises hold their money and where digital liquidity flows. In simple terms, Ripple has positioned itself to serve both sides of the bridge, the tokenized fund side through Securitize and the corporate treasury side through Treasury. The direction is clear. Funds, treasuries, and payments are starting to share the same digital plumbing. Quick reality check again so we keep this balanced. None of these developments force the use of XRP. Securitize integrating RLUSD does not mean every tokenized asset will route through XRP. And Swift's pilots remain asset agnostic until participants choose specific rails. But each step strengthens Ripple's position in the tokenization stack and increases the odds that XRP and RLUSD sit near real transaction flows when institutions need speed, finality, and global reach. Think about what happens when banks can move tokenized dollars, euros, or yen in seconds instead of days. Think about what happens when funds, treasuries, and market infrastructures settle through interoperable rails that speak the same data language. That is not science fiction anymore. That is the direction of travel in 2025. XRP's strength is that it was built for that world. It does not need to reinvent itself every market cycle. Its function as a bridge asset and a network security layer gives it a role that scales with the financial system itself. And because no new XRP can ever be created, value is tied to adoption and throughput, not to inflation or marketing. That is what makes XRP's model distinct in an industry where many tokens still depend on speculation. To put it simply, attention can inflate prices for a while. Utility endures. Solana's meme token surge showed how fast engineered demand can create a spike. Ripple's approach shows how slow, steady adoption builds infrastructure that lasts. The next phase of this story is convergence, not competition. As Swift pilots advance, watch for mentions of tokenized settlement layers, digital wallets, and ISO 2022 data exchange. Watch how regulators and banks frame interoperability between networks. And most importantly, watch how Ripple positions ODL, XRPL, and RLUSD within that flow. The groundwork for broader adoption is being laid quietly right now. The winners will be the ones that connect the old rails with the new. This channel is for educational and entertainment purposes only and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.